Lying awake at night, worrying about financial security is a concern that plagues many. What would happen if the bank holding your life savings collapsed? This nightmare scenario isn't as far-fetched as it may seem. In our comprehensive video today, we're delving into the unsettling concept of the bank bail-in scam, a potential reality with dire consequences for unsuspecting account holders. A bank bail-in allows a financially struggling bank to use the money of its unsecured creditors, including depositors, to restructure its debt and avoid collapse. This means your deposits could be converted into equity to save the bank, leaving you without access to your full savings. It's a stark contrast to the more familiar bailout, where external funds are used to rescue a financial institution. We'll explore the intricacies of this mechanism, highlighting the obscure clauses embedded in many banking agreements that put your funds at risk. Understanding these clauses are crucial, as they can have a profound impact on your financial well-being without your explicit consent. Moreover, we'll provide essential tips on how to safeguard your assets. This includes diversifying your savings across different financial institutions, investing in insurance for your deposits, and staying informed about the financial health of your bank. We aim to equip you with the knowledge to navigate these treacherous waters, ensuring you're not caught off guard by such schemes. By the end of our journey, you'll have a clearer understanding of how to protect your financial future from the potential threat of bank bail-ins. In the complex world of banking, being forewarned is being forearmed. Stay vigilant and proactive in managing your finances to avoid falling victim to this sophisticated financial sleight of hand. If you have less than $250,000 in a bank, then please skip this video. But if you have more than that, or plan to, or know someone that you could help, then by all means keep watching. And if you have less than that $250,000 in your bank, you may ask yourself quietly, just how much are you willing to lose if another recession or worse, a depression happens? Just how safe are you then? Please jump to the end of the video for the part about diversification. Definition of bank bail-in. In the shadowy corridors of global finance, two mechanisms stand as the last line of defense against economic collapse: the bailout and the bail-in. Both are emergency lifeboats in stormy financial seas, but they carry vastly different passengers and consequences. A bailout is like a rescue operation funded by taxpayers' money, swooping in to save failing banks and corporations from drowning. It's controversial, often seen as using public funds to save the elite, while the average Joe watches from the shore. But then there's the bail-in, a term that might sound less familiar but is far more chilling for individual depositors like you and me. Imagine waking up to find that the bank has frozen your account, your life savings are locked away, and a portion of your hard-earned money is forcibly taken to rescue the bank itself from collapse. This isn't a plot from a dystopian novel, it's a real possibility under a bail-in scenario. Your money, once thought safe in the bank, becomes the first line of defense in a financial crisis. As we navigate through the murky waters of global finance, the distinction between a bailout and a bail-in becomes crucial. One uses public funds to keep sinking ships afloat, while the other could directly seize your money without warning. The impact on individual depositors is not just financial but deeply psychological, eroding trust in banks and instilling a pervasive fear of what might happen to their savings in a crisis. This is not just about the wealthy, it's about anyone with a bank account. In a bail-in, your money could be used to save a bank from failure. The question is, how safe is your money really? It's a question that demands not just contemplation, but action. Educating yourself on the financial stability of your bank, diversifying your assets, and understanding the policies that govern your deposits are steps you can take to protect your financial future. Bank bail-in laws. Emerging as a response to the financial crisis of 2007 to 2008 were designed with the dual purpose of preventing the collapse of large financial institutions and avoiding the use of taxpayer money for bank bailouts. These laws allow for the restructuring of a failing bank by converting the debts owed to creditors and depositors into equity, essentially making them shareholders in the bank. This approach is particularly relevant for huge nationwide banks that were deemed too big to fail during the crisis. By requiring those who have a stake in the bank to bear part of the financial burden, bail-in laws aim to distribute the risk more evenly and discourage excessive risk-taking. Potential protection. Choosing a local bank over a huge nationwide bank can offer several significant advantages, especially in the context of potential bank bail-ins. If a bank is truly local and in no way affiliated with the major banks and their banking system, then you may have a much better chance of avoiding a bail-in on your accounts. What to do? When considering the stability of a bank and the safety of your finances, it's crucial to be aware of the potential signs that a bank may be at risk of a bail-in. A bail-in occurs when the bank is experiencing financial distress and uses the money of its unsecured creditors, including depositors, to stabilize itself. This can directly impact your savings, so recognizing the warning signs is essential for protecting your finances. Firstly, one of the most telling signs is the bank's financial health reports. A consistent decline in profits, increasing non-performing loans or NPLs, and a deteriorating capital adequacy ratio are red flags. These indicators suggest that the bank is struggling to maintain its financial stability, making it more susceptible to a bail-in. Additionally, a sudden increase in the bank's stock volatility and a downgrade in its credit rating by financial rating agencies can also signal potential trouble. Another sign to watch out for is the economic environment in which the bank operates. A bank might be more at risk during times of economic downturn, when loan defaults increase and the overall financial system is under stress. This environment can quickly erode a bank's financial buffers, pushing it towards a bail-in scenario. Small local banks, a good idea? When considering the potential impact of a national bank bail-in scenario on your local small bank, especially in terms of affiliation with large national banks, it's prudent to ask your banker a series of targeted questions. These questions can help you gauge the risk to your deposits and understand the bank's strategies for mitigating such risks. Here are some questions you might consider. Affiliation inquiry. Can you clarify the nature of your bank's affiliation with any large national banks? How does this relationship influence your operations and financial stability? Bail-in preparedness. How prepared is your bank for a bail-in scenario involving a major national bank? What measures do you have in place to protect depositors? FDIC insurance coverage. Are all my deposits covered by FDIC insurance, and how does your affiliation with larger banks affect my coverage limits? Risk management strategies. What risk management strategies does your bank employ to minimize exposure to the financial health of larger affiliated banks? Impact on services. In the event of a bail-in affecting a large national bank we're affiliated with, what impact might there be on the services and products available to me? Communication plan. What is your bank's plan for communicating with customers about the potential impacts of a bail-in scenario involving affiliated national banks? These questions aim to provide clarity on the extent of your local bank's exposure to the risks associated with large national banks and their potential bail-in scenarios. To protect your finances, it's advisable to diversify your savings across different financial institutions and investment vehicles. Don't put all your eggs in one basket. Consider spreading your deposits to ensure that you stay within the insured limits set by your country's deposit insurance scheme. Additionally, staying informed about the financial health of your bank and the broader economic climate can help you make timely decisions about your finances. You may want to consider other places to put your wealth, like real estate, stock, or bonds. Even precious metals can be a hedge in uncertain times. Talk with a like-minded investment manager. Find someone that can sense that you might be nervous and to humor you and your doomsday request to look at all investment opportunities. And not repeat chapter and verse about how stable everything has been. If they're willing to listen and give you what you ask for, then they can help you navigate the complexities of the financial system and recommend ways to safeguard your assets. Remember, being proactive and informed is key to protecting your finances in an ever-changing economic landscape. Don't forget to subscribe to Luxo-Life for more enlightening videos on financial literacy, success, and the mindset needed to achieve it. Explore our channel for related content, from investment strategies to personal growth tips, all designed to help you navigate the path to success. Your journey to financial enlightenment starts here. Join the Luxo-Life community today and let's grow together.